Hello and welcome to the expansion of supply chain finance driving trade recovery, the final webinar for this first day of our Future of Strategy event. It's an absolute pleasure to welcome Mirka Skripczak, who is Head of Working Capital and Trade Products at NatWest, Mark Ling, who is Head of Trade and Supplier Finance at Santander UK, and Josh Robson, who is from the Scale Up Institute. It's an absolute pleasure to speak to you all. I guess it's fair to say that between all three of you, there's very little that you can't cover in terms of supply chains. So I know that you're all wanting to get very heavily engaged and make sure that the UK comes and the world comes out of our supply chain situation that we're in at the moment because of COVID successfully and positively. So Mark, I'm going to turn to you first because I think we've spoken a lot about this in the past. How has COVID-19 visibly affected supply chains?
So thank you, Rebecca. So I'll give you some anecdotal feedback, but probably the best feedback I can give you is our recent trade barometer, which our autumn session, which has just recently been published. And in that report, so that's a survey of about 1,000 companies, and 32% of those companies see supply chain disruption as the key challenge to their business as a result of COVID-19. So that's obviously the sort of the stark reality. And what's that doing? Well, there's 22% of those companies are now using this catalyst, if you like, to rethink their whole business model and look at all those key challenges. So we've had a number of incidents around the world over the last decade or so, and I think back to the sort of Japanese nuclear sort of situation and how that affected various supply chains very specifically in the automotive sector. But this one's been much wider, and I think a lot of companies have looked at their sources of supply. So I think there was an absolute over-reliance on China, and not necessarily just one partner in China, but maybe 4 or 5 different factories across China. So people thought they were diversifying their risk, but in reality, because it was all coming from China, it was an issue. And so we've now had a whole raft of things happening, looking at strategy going forward. You've had a lot of press reporting about, well, we're going to onshore everything again in the UK. I don't think that's the right way going forward, and I think that argument is now sort of balancing out. But there are certain things that companies are re-looking at, where the reliances are in their supply chain, how they're affected, what their source of supply is, how they can diversify differently, how they can change the way they deal with their suppliers from that traditional way of managing a supplier relationship to a more digital environment. That's probably my starting gambit.
So Mirka, I know you've been very similarly seeing those types of supply chain changes, and Mark's point about a whole business model shift is something that you've seen as well, isn't it? Is it fair to say that is an enduring trend?
Well, absolutely. I think the current pandemic, and to extend in this country also the end of the transition period, definitely pushes businesses to rethink their supply chains and the resilience of supply chains. But I think the biggest challenge the businesses have to begin with is they do not really have the supply chains mapped. And without that visibility, without the exercise and time spent on mapping your supply chain, you will struggle to protect yourselves from vulnerabilities that are very much present, just hidden within your supply chains. I dialed into your earlier sessions during lunch for the multilateral tool. It's fantastic because when we think about this current situation, there are lots of lessons learned that we absolutely need to take into the consideration. So I probably pause there. I don't want to be stealing some of your questions.
No, it's absolutely fine. The fewer questions I ask and the more you guys talk, the better. But I think it's really nice. We've had 2 banks say businesses are needing to change. They're changing and reviewing their reviewing their supply chains completely. And some of the things that are coming through we'll unpack a little bit later on. But this sort of investigation into the depth of the supply chain, getting down in the weeds, is a critical part to all of that. But Josh, I know you've conducted a survey as well, haven't you? So we've got the battle of the surveys going on here.
Absolutely. No, that's right. And we recently published our annual review, which came out just earlier this month. And that included pretty up-to-date data from 645 scale-up businesses, which, I mean, those alone account for sort of 6 billion in revenue. And I think from that sort of cohort of businesses, we also saw markets rising as an issue. This is actually something which has been happening year on year. So the markets issue has been kind of dialing up in importance, and that includes the broader supply chain understanding and as Mirka suggested, mapping that and understanding that. But coupled with that is the fact that a lot of these businesses are now looking to the future and understanding how they can pivot their businesses to take account of the COVID challenges, but also bed in some of the efficiencies that they're gaining and really going to a place where they're feeling much more secure about the future and where they can move on in 2021.
So I guess I'd come back and say, to what extent is COVID actually accelerating patterns and trends that we've seen for a while? Certainly in other areas that we're looking at, we're seeing COVID actually just be a final concentration of all the patterns and trends that we've been seeing over the last few years. And we'll unpack this sort of technology, digitization, all these things. Is that something that you're seeing in your business surveys as well?
Absolutely, and just to pick up on that, I mean, we have seen the markets issue not just because of Brexit, it predates Brexit as well, but COVID has really sort of shone a light on the challenges that businesses are facing, and it's really sped up a lot of the changes that I think a lot of people were starting to consider anyway. And I mean, one of the things we found in terms of the technology dynamic is understanding how businesses can quite quickly embed some of the remote working dynamics, but actually when you start to look at the supply chain issues as well, it's really sped up sort of a drive to understand, as Mirka suggested, the understanding of the overall supply chain. And we know from a survey that scale-ups are spread throughout that. That's not just a top tier or even lower down. They're pretty evenly spread throughout the whole supply chain.
So Mark, why did we need a pandemic to make us all focus on our supply chains?
I don't think we needed a pandemic. And of course I would say that, wouldn't I, Rebecca? But I think these things are already happening yet. So I just think it was a further catalyst to things that were already happening. You know, whether they are happening because of digitalisation in the UK, lots of changes to competition, but the big Brexit word, we've been focusing and trying to show our customers what the opportunities look like in different markets, and I think most companies now realize that trading internationally, as an example, starts to de-risk their business, and that's not rocket science. It's a diversification strategy, like any risk mitigation strategy is. And all of certainly the UK now leads to be looking at that diversification strategy. Europe is still going to be massively important to us. We know that, but they need to look at other markets. And when you look at some of the the fundamentals of how you develop your supply chains in overseas markets, well, typically that's been, well, you go and do a visit, you go and do a trade fair, and those clearly are things that over the last 9 months have been, impossible to do. So that's where, a lot of people have looked at these digital channels. We're using one now, clearly. Who'd heard of Zoom, before March this year, to be frank? We'd all heard of slightly different channels, but, Zoom, and, we had Teams in my organization, but, I'd never bloody used it, to be frank. But now we live and breathe these things every day, and there are many more. So digital conferences now, are becoming much more common, and I think they will be part of the solution going forward. They won't be the only part, because I still think, people need to meet and that build that trust. It's going to be still that physical interaction, but no doubt we'll be traveling less. We'll be in aircraft less, but using a combination of these digital tools will be part of the solution.
So, I mean, that's really interesting, isn't it? Because, I mean, both you and Josh have referred to this fact that we're working in a very different way. But for sort of heavy duty manufacturing supply chains, obviously that's difficult. But to what extent are we all becoming manufacturing as services? I mean, Mirka, are we shifting more towards a technology-based, service-based virtual economy? And what consequences does that have for all the companies that are in digital supply chains?
Well, it definitely creates a big diversity and creates an opportunity. There are potentially the winners in this scenario. So if you think about the losers and winners, the digital software companies are definitely in the winner scenario. But there are lots of companies that are becoming, and already have been prior to the pandemic, quasi-technology and quasi-tangible. And a good example here would be Amazon. You know, they are very, very technology driven, but they're very real business still. And I think when we consider the shift, and even for core branches of industry in this country, there is a lot they can do to drive that resilience of their supply chains by using the new technologies. You know, understanding how you map your substitute suppliers, very important. You know, there are lots of experiences that we can take from companies like Amazon, which show them, okay, you have currently this buying options. We don't see that. I mean, I know that's the tool that you guys are working on, and it is fantastic. But I think it's companies like yours, Rebecca, that will have to drive that synergy between manufacturing sector and people who are still within tangible production, whether it's heavy manufacturing or it's something quite lighter. That technology and the synergy with technology will really have to happen. And the businesses that are not following that trend will definitely lose, because the world will never be the same. The technology is here to stay. We learned, and there are lots of things that we now used to, and we probably would not want to go back to the old ways. So I'll be cheeky. Losers might be, you know, Mark, Josh, are you looking forward to wearing suits and ties?
I quite like the tie, Mirka, to be honest with you, because it allows me to switch. So when I go back to the city, if ever, I will be wearing a tie.
So there we go. Maybe there is a future, but you know, I speak to lots of people. Their opinions sometimes are divided. But I think this is a catalyst, definitely, of accelerated digital growth. But we mustn't forget there are dangers associated with it, because there is so many things to choose from. So talking about that pivot and shifting mindset, we also have to be extremely careful that we do our due diligence when assessing those new tools, those new technologies. So we just don't jump on something that's shiny, because that brings a lot of risk associated with it as well. So we will have to have extra, you know, from financing institutions' perspective, we'll have to have that extra scrutiny as to which technologies we're inviting to our ecosystems to keep our customers safe.
So I mean, there's something there in the financing, because I mean, I think it's fair to say that one of the vulnerabilities that's come across during the COVID-19 pandemic has been the issue of supply chain finance, where the finance is going to come from. You've seen inventories collapse. You've seen businesses at the bottom of the food chain effectively finding it very difficult to survive while those inventories are shifting around the world. And we've all said that is an issue. Josh, to what extent do your companies in your survey say that finance is an issue? Because I kind of know what Mark's reaction on this is going to be, and I'll bring him in a minute. But what do your firms say?
Well, there's a few parts to that, actually. And one of the things to point out this year, and we think driven partly by the COVID dynamic, finance has jumped up in terms of importance. And traditionally within the scale up sort of community, finance is sort of one of the top 5 issues, but the top are usually and increasingly has been access to markets, access to talent, and then sort of understanding finance comes sort of 3rd or 4th depending upon the company and the sector. Generally is 4th. This year it's very much up there as one of the top 2-3 issues that companies are facing, and that is part of that. But the broader point here, I think, is really understanding the degree to which supply chains are connected. And I think there's an element here of, you know, the companies that we asked, that there is sort of about 39% of them say there's an informal network, but only sort of 16% say that there's a structured peer group of companies. And understanding the degree of issues within that supply chain and how that supply chain is connected to itself, I think, is a huge issue that's often done actually by institutions such as yourself, Mark, having to jump in and do that on behalf of companies, or indeed the supply chain overall, rather than having a better understanding of the way that supply chains are connected intrinsically within that. And I think that's a huge opportunity for peer learning, which kind of links into some of the other points, and understanding how you can sort of bring some of the specific skills in and really upskill that whole supply chain as part of a broader issue of understanding the stability of it, rather than wait until there's a crisis point and then sort of trying to figure out how that supply chain fits together. So I mean, I think in terms of the finance point, yes, trade finance, other sort of procurement related sort of financing products are going to be pretty key going forwards, particularly in relation to the sort of COVID challenge. But actually there's a broader point here, which is we should probably try and understand the way that supply chains are fitted together and allow those supply chains to do that without having to wait for a challenge, or indeed trying to rely on financiers to do that on behalf of the overall supply chain itself.
Mark, what's your reaction to that? I know you're very interested in the sort of interconnectivity between supply chains and actors around the world and helping smaller businesses to cope with all of that. And the point on skills is a very well made one, isn't it?
Yeah, absolutely. So look, I think you're right. Our historical sort of picture using the barometer has been that the access to finance was not really a big issue. And it's not that it was unimportant, it wasn't the biggest issue. So, we'd seen probably 3 or 4 years ago, it was probably around number 4 in terms of importance to, moving up to 10 or 12. And I think with Josh's report is that also that finance is not just bank finance, but also equity finance. Whereas
Absolutely.
I'm only, when in our survey is really only looking at forms of bank financing, if you like. But as I say, it's not that it's unimportant. It remains very important once you've resolved all those issues about skills, knowledge, access to markets, etc. But I think as we come through this COVID issue, there is no doubt, everybody knows this, that the balance sheets of the world need to be restored, and because of that, I think it's going to be very different to post the 2007-8 financial crisis, where we all thought things were going to be really, really difficult for quite a long time. The reality is it fixed itself quite quickly. This time, I think it's going to be different because you've got those, the global balance sheet, if you like, has been damaged. Every single business virtually has had some effect or other. Clearly there's a few sectors that have done very well, and the Amazons of the world, as mentioned already, have done very well. But one of the things we're going to have to do if we want to get the world, and particularly for us, the UK, on an even footing, is look at how all of these connections work. And for Mercer and I, our challenge in our organisations is going to be not just traditional trade finance, because that's not going to work for everybody, and it's expensive, and there's lots of skills you need to learn, lots of regulation. But how can we move things like supplier finance further down the food chain and push it into the SME and mid-market companies, where it can really have a really good effect, particularly on a cross-border basis, but for different reasons, perhaps than where the classical supplier finance started its origins, which was a credit arbitrage between a big buyer and a small supplier. I think it's very different now. It's about showing certainty of supply and digitizing that whole process.
So I'm going to summarise this because there's a question coming in from the audience, which I think is very relevant here, which is there's obviously some kind of a mismatch, because actually a lot of this is about the speed with which finance gets to certain parts of the supply chain, and we have the technology and we have the systems to get that money to places more quickly. It's just that small businesses are highly risky, and the question for all sorts of reasons. And so the question that's coming in from the audience is around how we bridge that gap between a perception that there is amongst the small business community an issue with access to SME finance, and a banking perception that maybe it's slightly more complicated than that, and we need to think it in a different way. So I think the answer, as an economist, I would say this, but I think the answer is the demand and the supply side. I think it's that we're not thinking enough about how an SME needs to learn through this process to access the finance. But maybe Mark or Mercer, your views on this.
Well, I think, first of all, perception is reality. So we must not belittle that. That's how businesses feel, and we need to respect that. Of course, as a fellow economist, I do agree with what you said. The world of finance is not as simple as it used to be. The world of finance is complex. And I think there is some requirement from the businesses to try to understand what are financial institutions like Mark's and ours on mine, looking at assessing creditworthiness of the companies. And we absolutely are continuing to evolve and continue to change, but also is understanding where such intervention, i.e. a cash injection, should take place. Again, this brings us to that supply chain point. I couldn't agree more with what Mark said before. We need more and more collaboration, and we also need ability of various players in the supply chain to start providing that credibility. I tell you what, we're going to be hit as financial institutions. Our credit decisions, in a great part, are based upon financial results of companies. Well, we know that the pandemic is absolutely skewing those results. No one can rely on them properly. Hence, having some tools like supply chain finance, when you have one party saying, no, I'm good for my money, these are real invoices, absolutely, I want my suppliers to take benefit from me saying that I absolutely will pay them on a due date. That's a good example. And it's educating yourselves about forms of finance and understanding where we'll be shifting as financial institutions. And there definitely will be a shift from more towards more collateralized type of financing, things that are much closer to your trade cycle. And I agree with Mark, some of that will be the trade instruments, but they're not for everybody. But you need to think, okay, where is my cash intervention? Where should it be? Can I prove to the financial institutions that it totally aligns to my trading cycle? And the moment you help us bridge that trade cycle of yours with your financing requirement, the easier it is for us to arrive at our decisions, if that makes sense.
So I think it makes perfect sense, and I mean, I'm answering on behalf of the person who asked the question, but I mean, when we look back over all of this, we're going to say there are a number of lessons, aren't we? We're going to say there's a lesson around the speed with which money gets into the system. There's a lesson around business models, and there's a lesson around collaboration as well. Josh, I'm going to come to you with this next bunch of questions. I mean, what other lessons do you think we're beginning to pick up from the COVID-19 crisis, and how enduring are those going to be?
Well, I mean, I think that there are a number of parts to that. I mean, one of them is that absolutely businesses are now looking to the future. So I think there are a lot of businesses that responded to our survey and flagged that they have changed and pivoted elements of their business model, and many of them have done so with a mind to keeping those as permanent changes. But they're now looking to the future, and the majority of the businesses that responded to our survey, the scale-ups, are looking to grow next year in spite of those challenges. But I think there are sort of a number of challenges within that, including the collaboration point that you make. And I think a lot of people do want to collaborate more with government. They do want to collaborate more with corporates. And one of the points that I think comes out very strongly is that, you know, 4 in 10 scale up sell to large corporates, but actually the number that collaborate on developing products and collaborating with government, only 1 in 10 sell directly to the UK government. And I think that's something which is quite a stark difference. And more to the point, I mean, I think a lot of them have aspirations to sell to corporates, a lot of them have aspirations to sell to government, but they still perceive sort of quite a range of barriers in accessing those and understanding how to do it. So I think there's an element of as you say, perception is reality, breaking down those barriers in terms of understanding the nature of the sort of challenges businesses face when they're trying to engage in them. Is it finding the opportunities to bid? Is it understanding the complex procurement processes around that? And that's partly an education piece, but I think there's also an element of the people who are looking to collaborate with innovative businesses that can bring quite a lot to them, whether it's government or whether it's individual corporations, how they can structure their own procurement processes in a way that actually encourage these businesses to engage with them and help to support them through that process, so that you don't end up with a lot of the risk, a lot of the understanding, a lot of the hoops that have to be jumped through being on the side of the innovative small business that actually has significantly less sort of personnel and potentially less experience in terms of breaking that down, even though actually they're the ones that are bringing the innovation to the table. So I think there's a significant element of that, and looking towards sort of the COVID sort of future piece. I think, you know, the way that businesses are sort of tackling this and the way that scale-ups are sort of tackling this, yes, they're relying more on some of the schemes that are out there from government, but actually they are still looking to grow. And I think that's really the important part to bed in as part of this. They're still looking at the way in which they can overcome those challenges and sort of look to the future and look at other markets internationally. So really understanding that the challenges that they face on a company level and how to break those down from a supplier side level, whether that's government or indeed large corporate or the rest of the supply chain, I think it has to be sort of baked into any economic response, and that then needs to be linked up to the broader finance products on offer.
Yeah. Rebecca, can I just come in on this procurement issue? Because I think it's really important. I mean, there's, you know, the scale up report, which is very fascinating and has always got a huge richness of information and insight. But this thing about, you know, public procurement is really important, but it mirrors itself in large company procurement. If you go into, you know, FTSE 250 multinationals, etc., it's exactly the same issue. And I know in my own organisation, you know, the moment you've got to deal with procurement, you put your head in your hands, to be frank.
You know, it's another 6 months.
Really, really complex.
Yeah.
And guess what? Because it's complex, SMEs think, I can't spend my time doing that. I'm never going to get there. I might never get there, or it's going to take, you know, I can't wait for 9 months to get through that process. So, you know, this word collaboration is very much used. It's not overused today. Collaboration is not an overused word, because we have to find ways in which all of the ecosystem can get much better at collaboration and understand that these are the big barriers to, you know, SMEs and indeed mid-market companies to start, you know, going after whether it's an export contract or even a domestic contract, because the processes with government departments and with large corporates are so difficult. So we've got to find ways in which, you know, the whole ecosystem can smooth that out. And technology, I believe, is the key. And, you know, just simple things like, you know, moving from everybody having to do their own KYC to registries that everybody can rely on where that data goes in. Those are fundamental sort of tools that, you know, if we can crack that nut, and that, you know, government has to help us lead that, as do industry bodies, then we will get somewhere. Yeah? We will get somewhere.
So you're getting big thumbs up from the audience here who are engaging through chat on questions, and so Mark, the big agreement with that statement, but the broader point, again, it's another question, is that is it actually government procurement is not set up for SMEs. I mean, if I look back over the last 20 years of research, it's been an issue all the way through. I mean, I did work on
there's a complete paradox to government saying how SMEs are so vital to the country and they're the lifeblood. Well, look in your own backyard.
Well, exactly. Mirka, does that resonate with you? Where you see SMEs not getting...
I will say something very controversial. I don't think that government procurement is set up for anybody, if I'm brutally honest.
Okay, good job. That one's not going live on Twitter.
It's not, but to be honest, I think they do know that and they work on it themselves. So it's true when we want to write, heads down to government, because there are lots of schemes that they mobilized using technology during this pandemic, such as, for example, the furlough schemes, which are accessible directly through them, various grants, and they've done it very, very well. So they definitely learn from that experience. But the procurement is key, because procurement is all about how quickly cash can circulate. And inefficient procurement functions are so, in my opinion, are those islands that are stranding cash across the supply chains. And we see it through every single big organization, whether it's private or public sector, we see that. So I think, again, this pandemic has to start putting some robust solutions and avoid the rubber bands syndrome, that we get back to our old ways, and really drive efficient procurement processing functions, especially when it comes to payments between the parties. And that cash has to really be exchanged quickly, because it's vital for the businesses, and it's going to be even more important in the months to come.
So I mean, I guess if we're looking at the lessons that have been learned, it's around procurement business models and collaboration. How sustainable, how enduring are those going to be, do you think?
Well, I mean, I think one of the challenges that really needs to be sort of looked at is the way that internal processes within government actually then function, as Mirka was saying. And one of the points here is that, you know, there are procurement champions within departments, but it's important to link those up and make sure that they're working to standard KPIs and other things, which can then be sort of tweaked from a central level to make sure that they are actually working towards, on that individual basis, the actual end goals that government stated very publicly. So that it's very important to recognise, yeah, government is trying to move in this area, and we recognise that, and we think it's really good that they are. But there are some of the basic challenges which I think individual organisations often deal with, which is how do you make sure that everyone's sort of moving in lockstep towards the sort of overall overarching goal. I think, unfortunately, for a variety of historical legacy reasons, those aren't necessarily in place to give them the support that they need in order to help achieve those goals. So, you know, how do you make sure that all of the procurement champions are working and trained to the same standard, operating to sort of a codified framework? And then how do you make use of existing things that government has in place, such as the SBRI and others, to make sure that they are understanding those challenges on a more granular level, and then sort of working to actually action those and make it easier for companies that are actually trying to do that right now at a time of a pretty significant challenge, where government could really help them out and actually provide significant opportunities to help them scale up.
So I mean, there's a lot there that I think is really important. And the theme that keeps coming through is technology, technology, technology. Now, Mark, I'm going to ask you a question that's come in from the audience here, and I'm going to adapt it slightly, so I hope the audience member doesn't feel too offended. But the question is this: bank systems themselves are not set up towards the smaller end of the market, the very small businesses, because I mean, we all know, and you and I and Mirka and I have discussed this a million times, about how very small businesses, they might be very strong, they might have nice exports and everything, but they are so expensive to onboard that they become unviable without any kind of technology involved, or without a real, you know, under the current structures. So the question is this a challenge? And my adaptation of that is, well, actually, is it fintech that's actually helping us through this? The collaboration in fintech between fintechs and banks is actually turning into less of a collaboration, more of an ecosystem, actually, where fintechs and banks aren't competing with each other necessarily, but the solution in the end for solving that and actually addressing that sort of even medium-sized company issue now, anything that's a smaller business, is being solved technologically. Is that correct?
Yeah. So, well, I'm not going to say it's correct, but what I will say is that, you know, banks have been slow to adapt and change to new technology. Yeah, they've been for years concerned about the, if you like, the foundations of their technology, and it's really only of late that you know, in the last few years, that the technology has really come along that has sort of, I think, changed the game. And then if you add to that that we've had, you know, huge amounts of disruption from fintechs, which is a really, really good thing. So if you think about payments, you think about foreign exchange, you know, there's a myriad of different things that you've seen fintechs come along and disrupt and force the banks to change, which is absolutely a good thing. Yeah. So what's now happening, and you know, I can speak for all the major organizations, but you can see it, you know, on the high street with the new challenger banks that are out there in terms of their digital only offerings, is that fundamentally the banks are changing the way they serve their customer, because it's driven by demand, but also driven by the availability of technology. So there's still a long way to go, an absolutely long way to go, but the pace of change has been, the last few years, I've never seen this kind of pace of change in my whole of my career, and I've had, sadly, a long career in the industry, but the pace of change is it's frighteningly fast. We all need to make sure that we've got the appropriate skills to cope with that change, and by that I mean all customers need. It's been mentioned a few times before. Customers, yeah, SMEs, mid-market companies, and the larger corporates all need to upskill their staff as well. Yeah, so because it is moving so fast, and you know, with that speed, there comes some risks as well. You know, we talk a lot about cybercrime. So if you're not smart at the way you use this, then there are some risks associated with it that can get in the way. But I think the pace of change is good, and I think is really exciting. I think the next 5 years in the world of sort of trade and supply chains is going to be really exciting.
So we have another question here, fantastic audience engagement here, which is, can the cultures of banks keep up? So, I mean, I think it's fair to say that technology is shifting and changing things, but can that sort of resistant culture to maybe SMEs potentially actually be overcome with the technology that's is it enough by itself to solve the problem and actually close those barriers between different sizes of companies as well, so that smaller companies can start to be treated in the same way maybe as larger companies? Melka, do you want to come in on that one?
Sure. So I think that we absolutely are changing our culture to be absolutely more technology native. It's not easy, but I would say, and I Mark and I meet frequently through various forums or various roundtable conversations, and we do that with other banks, major banks as well, because the question was about banks' culture. And I think the topic of technology is a dominant topic. So we absolutely are becoming, in a way, tech specialists. When we talk about certain solutions, I'm very passionate about the future of distributed ledger technology. I think in supply chains, it's going to have huge impact. But you need to talk about it, and you need to collaborate, and you need to learn from one another. To what Josh said as well, that ability to cross-pollinate what you learn, because we can't afford not to share our own mistakes, because the progress of that technology will not happen. So it's almost like a two-pronged approach to this, changing cultures within, but also changing the mindset towards collaboration, because technology is at such high speed, as Mark said, that without our collaboration, we will not be able to serve our customers, and we will not have ecosystems that are thriving. So we absolutely are. I'm looking at my team, people that work around me, and then you can go to any one of them, then they say, I'm requiring them to get up to speed with technology and be able not to look at technology just from a functional assessment point of view, but the actual technical one as well. So absolutely, I think it's happening. We are changing the culture towards that technology and ability to scale, because I totally understand criticism, and I take it on board that SMEs don't find it very friendly when it comes to available self-serve solutions in a banks. But we will also ask for some patience, because we're operating at scale. And very often we have fintechs approaching us with fantastic solutions. But when I ask that fintech, okay, so what is your speed? How many transactions can you process per second? Or how many customers do you have? When I'm operating in hundreds of thousands, millions, and they are operating in hundreds, you can see there is a massive gap, because I have to have solutions, and so does Mark and any other big bank, that are absolutely scalable and can operate at enterprise level. And that enterprise level is not very often, it's not easy thing to achieve with new technologies. We do a lot of pilots, we're getting excited about them, they definitely bode well for future, but people also need to realize we are scale businesses. We need to have solutions that can work and be effective for thousands and hundreds of thousands and millions of customers. But I think there is hope for people that are observing banking sector, because with our respective institutions, if you see what's happening in our retail banks, they are ahead of the curve in terms of the actual digitization. Look at the current experience for consumers when they try to get a mortgage. It's a totally different experience when we had our first mortgages back in the day. It's all digital. So there is a lot of read across that banks that are commercial banks will definitely take from their retail branches to drive that higher scalability and ability for small businesses to self-serve digitally.
So I think that's a very comprehensive answer. Just from your point of view, when you're thinking about what your scale-ups say, are they seeing this shift in culture? Because I mean, I certainly see it when I'm speaking to banks, and I think one of the biggest shocks, and I've been working on this for a long time, but one of the biggest shocks is actually not necessarily the fintechs. It's not necessarily the fintechs who are disintermediating banks in this whole export finance space or any finance space. It's actually big tech. It's the Amazons, the Googles, the Microsofts, etc., who are moving in and can actually operate at scale. So how do you make sure that this finance is distributed evenly across supply chains, and are your scale-ups seeing any kind of difference in the way in which they're working technologically with the financial services sector in their supply chains?
Well, I mean, I think the broader point about scale-ups is that they're generally pretty early adopters of technology in general, so they're fairly au fait with that. I mean, I think that the point in terms of finance is it's the type of finance they're looking for, and I think a lot of the points made around bank finance, yes, scale-ups do use bank finance and debt, but the real drivers of scale-up growth generally are equity, as Mark mentioned earlier on in the session. And the challenge there is often location-based. So it's really not necessarily about the technological bridge, although I think in the current scenario, we're seeing a demolishing of, I think, what used to be referred to as the £200 cappuccino, which was how do you have a casual run-in with your next sort of big investor by, you know, getting on a train from Newcastle down to London so you can meet for a coffee in the station and have a chat with someone that might give you your next sort of funding round sort of introduction. I mean, I think that's sort of been broken down by the technology space, but more generally, it's about, is that money working for you as a business in the right way, and is it helping you to achieve the things you're looking to achieve? And often the real challenge there is about the longevity of that finance. Are you finding the right growth capital? Are you finding the right the right sort of understanding and expertise that goes with that equity finance to help you break into the markets that you're looking for? And one of the points that we have looked at over this summer is actually the way that COVID has specifically impacted the growth capital piece. We've looked at this, and this is a number that's been out in the market for a while now. But obviously, the patient capital report and other things have looked at this before. We found that due to COVID and cyclical challenges associated with that, the growth capital gap's broadly doubled to about 15 billion a year in the UK at the moment. So there is a shortage of that, and understanding how you can get access to that, particularly on a regional level, is a real issue. And that's where the perception piece comes in that was being discussed earlier as well, which is companies are perceiving that money is still located in London, even with sort of a spatial dynamic of Zoom and other sort of methods of getting involved. So I think from a scale-up perspective, it's not so much are banks or others really opening their doors in the right way to them. Is the money available, and is that money appropriate for the growth journey that they're looking to be on? And that's something which I think is it's a long-standing issue. It's not a new issue, but as with everything, COVID has really sort of turned that into a pretty critical issue. And for some businesses, particularly those that perhaps were coming to the end of the money that they had raised, it's been really quite acute over the summer. But equally, you know, there is money out there. It's just finding the right route to that as a business that's probably growing pretty quickly and has a number of specific challenges ahead in relation to the market and uncertainty that's around. So, I mean, I think technology is part of that answer, and I think, you know, that the banking sector in general is part of that answer. But actually, this is really a regional question. How do you get that equity into the regions, and how do you sort of break down those regional disparities? And some of that is perception, I think.
So this is the levelling up agenda, and we've all become very familiar with that over the last few days. And we'll talk about that in the context of sustainability as well, because I do want to move on to a sustainable supply chains element to this conversation as well. But Mark, I think the important thing that I'm hearing from the conversation that we've had so far and what Josh has just said is that this is about banks and businesses working together, isn't it? It's about understanding the client journey, as John said in the session earlier today, and it's about understanding, you know, what a company wants and what it needs to achieve, and setting the finance and the terms and the conditions and everything that are suitable to that. And that will differ in terms of the geography of the business as well.
Yeah, absolutely. I think one of the things out there today, Rebecca, is that there are lots of, you know, if you like, individual actors in different stages of a journey, you know, and I think that's why the Scale Up Institute has been so successful. You know, and Josh will tell you how long it's been going now, but, you know, in my mind, sort of 5+ years now. But the issue has been historically, I think we've looked at just one individual component, and we certainly in Santander are trying to, you know, you talked about sort of behaviors and culture and what have you. We're trying to really reprogram our people to think about what's this journey that these, you know, if it's an SME in food and drink, if it's an SME in the industrial, in manufacturing or in life sciences, think very specifically about that sector and the life cycle of that company, and then think about, you know, what that company needs along that journey. And you know, we talk a lot about it now in Santander, what we call beyond banking. Yeah, because it's no longer enough just to think about financing. It's no longer enough to just think about, you know, providing a deposit, you know, somewhere you can put your deposit, somewhere you can get your FX. You know, we need to think more holistically about what that business needs. And most, you know, most businesses is fairly simple. Certainly in an SME world, it's, you know, help me grow, save me time. Yeah, those are. Don't
charge me too much.
Yeah. So
yeah.
They don't mind what they're charging if you're helping them grow, Rebecca. If you're charging them, you know, 5 or 6%, but you're helping them grow at 30%, guess what? The CEO doesn't care. Yeah. The finance director might, but the CEO doesn't. Yeah. So
I want to say that's a very important point, because I remember another bank, and not you, but another bank about 10 years ago saying, we don't want to get into an interest rate arbitrage here because we're actually about a trusted advisor. So and I think that's the point you're making, isn't it?
Yeah, but it is also going. Banks have to reinvent themselves. I mean, the old historic models of banking don't really work anymore. Yeah.
Yeah.
Because if you look at where, you know, deposit interest is now, you know, virtually nothing, you know, that's not going to change. You know, I heard somebody say this morning, might not change for, you know, 2 decades. Yeah, it may or may not be right. I certainly think the next 5 or 6 years we're going to be, you know, absolutely down, you know, very, very low. But it's not just that factor. It's, you know, the cost of regulation. It's the you know, cost of doing a payment, you know, a SEPA payment, foreign exchange margins, everything's being compressed, and understandably, because that's what competition has created, but regulation has also created. So it means banks can't, if they want to keep a traditional model, they're not going to be here much longer, to be frank. So you then need to go back to your customer and say, what does the customer need? Who are our customers, and what do they need? And if we ourselves as big banks want to compete with the likes of Amazon and eBay and Tencent, etc., we have to change. And the way to change is to think about, who are our customers, what do they do, how can we help them?
And that's like, just to jump in on that quickly, I mean, that's a really important point, Mark, and I should have made it a little bit more broadly earlier, but the segmentation piece is something that permeates throughout all of that. It's absolutely critical. And we talk about this in relation to all services, not just the finance dynamic, but, you know, in relation to the way that government itself recognises the overall UK business population, because you need to have, as Mark says, you know, a tailored approach. You need to hide the wiring. You don't need, as a business, to be told when you ring up about a particular product or service, or indeed a government scheme, that actually you need to call back a different number, or go and visit, you know, a different person in a different department. How do you sort of join that journey up? And the way you join that journey up needs to be very business specific. And when you get down to the local level and understanding the businesses on a fairly granular basis on a local level, that's where you can really start to get into some of the interesting things around supply chain, you know, development opportunities, and understanding where export potential can really be mined and understood within local communities in the UK.
So sorry, go on, Weka.
Oh, it just brings us to the basics, isn't it? You need to stop. We have 2 product heads, and what we have to stop doing is selling products. We need to talk about basic. We need to talk about supply and demand. That's what we need to talk to our customers, not selling them products. So yeah, I think it might be radical, but that's exactly where our thinking is. We might be product heads, but we need to stop selling products.
So you're selling a principle. You're selling actually something that is way beyond what people go to a bank for, which is you know, simply, most people think it's a bank account, but actually, particularly in trade finance and management of supply chains, it's about that whole journey. It's about that whole interactivity and that whole ecosystem. And with the word ecosystem, I want to bring us on to our last theme of this session, which is actually the environment, sustainability. How do we make our supply chain sustainable? Mirko, I know this is something that's very close to your heart.
It's a massively broad church. And I think it will be the topic for the next few years. But again, it will require a lot of collaboration, because you're talking about the environmental sustainability. Absolutely, it's its own branch. You talk about financial sustainability. You're talking about geopolitical sustainability
All
as
of
well.
the above.
We're talking about all of the above. And we have to,
inclusivity, yeah.
inclusivity, human rights, all of it. So I think we'll have to start digesting this in small bites and start driving good solutions for some of the branches, because trying to come up with solutions same time for everything would be very, very challenging, I would say. But we're seeing a lot of connectivity. What I recently discovered is a huge progress towards carbon footprint, and how businesses are absolutely tuning and want to understand what is their carbon footprint and how that starts playing part in everything they do, in what they require from their suppliers, what they require from their customers, and how they want to be evaluated when they're considered for financing, for example. So it's positive, because whenever we talk about sustainability, it has to have that momentum behind it. So you're driving solutions that are recognized across the industry. Otherwise, you're creating, again, silo solutions, and there is no connectivity. So these are the big topics that, again, have to be tackled together. But I like the fact that corporates are driving it. We see a lot of examples when we are requested and invited for tenders. And there is a massive part there, heavily weighted towards how successful or not you are, explaining what is your own sustainability agenda, what you're doing as an institution to be sustainable, what you're doing to make sure it has longevity. And that's a very, very positive trend that we all are responding to. But let's be very clear, we're still learning. We're still learning what good looks like. And I think transparency, technology, again, will play part to show all the various actors in the chain how they interact, the good guys and the bad guys. But it's very, very challenging to get it right, because inadvertently, if you're not careful, you may start penalizing people. And it's also our responsibility to help people to get to their sustainability goals. It's not good enough just to set the sustainability goals. How do you help businesses to get those sustainability goals to be part of the broader ecosystem? Because there are always big parties in an ecosystem that drive what the smaller parties in that universe will do. But I think there is greater corporate responsibility from everybody to work on this together and help businesses achieve their sustainability goals.
So, I agree completely, Josh. What I'm beginning to think, though, is that the burden on business of doing this, as well as the burden on banks, is absolutely colossal. So if you look at government policy which is looking at the possibility of tracking tier 1, 2, 3 supply chains, large corporates tracking that means very small businesses are going to need to understand exactly who their tier 1, tier 2, tier 3 supply chains are. I know how difficult administratively that's going to be, and I'm not saying we shouldn't do it, because absolutely we should, but what can business do to make these things, this whole thing, feasible, do you think?
Well, I think without sort of drawing it too far back to the big picture, I think there's a leveling up point here as well, and a regional point, because I mean, one of the things that we looked at a few years ago now actually is the way in which local industrial strategies are developed around specific sectors and specific regions within the country, many of which have got low carbon, green and broader sort of sustainability goals embedded within them. And I think the question really, when you start thinking about things on that level, is how do you then relate those challenges and the challenges that are almost mapped out on a strategic level locally back to the needs of the individual businesses and the supply chains that are then present within those regions. So if that's in the Midlands and supply chains that have surrounded Drax or other sort of large power stations that have traditionally had a very heavy carbon footprint, how do you sort of think right the way back from that sort of big challenge down to the skills challenges, to the individual challenges that businesses face on a smaller level, so that you can then sort of build a fairly cohesive program around them and understand how to support that supply chain, but also how to support the individuals involved within those companies when they look to either reskill or look to pivot their business into a different area. So I mean, I think this comes a little bit to some of the research we did on on sort of overall drivers of scaling. And I mean, the three overall drivers of scaling in the UK are number one, access to high quality talent. Number two is hubs and clusters, particularly well curated ones that allow access to large corporates for growing businesses, but without saturating one particular area and becoming too reliant. And then access to equity finance. If you build those into a cohesive strategy about how you attain sustainability goals, then you can start to get back to the individual company question of how do you understand what it is that an individual company needs to do, and where do they go to get that help. Hopefully that help has been sort of mapped out a little bit for them from the fact that there's a plan to achieve those challenges locally. So you're not sort of saying to a local business, the onus is on you to go out and understand how you can reskill. The real point is, if you're part of a broad supply chain that is going through significant changes, or if you're part of a sector that's actually going through changes within a local area and region, these are the programs that exist for you. And then you can start to go back to what Mark was talking about earlier with segmentation and understanding how you then approach that from a company level.
It's an amazingly complex area. Mark, I guess we're beginning to run out of time, and I want everybody to summarise. So I'm going to ask you the final question, but I'm going to get everybody to speak for 1 minute without hesitation, repetition or deviation on the subject of the future of strategy. So where do we go from here? How do we get to this event in a year's time? And we're talking about positive things around clustering, around collaboration, around how we've dealt with COVID, and of course sustainability. How do we get there? What's the future? 1 minute, no hesitation, they'll buzz, no repetition or deviation.
Okay, look, I think the key, as I've mentioned the word several times, is collaboration. It's collaboration, it's alignment, it's public sector, it's private businesses, it's peers supporting other peers, learning from each other, and embracing digitization.
Thank you. Josh.
Well, I think one of the big learnings from COVID has been, it's really put us a bit of a focus on the value of data and how data and sharing and the collaboration point that Mark mentioned can really help speed things along and help to get companies connected up. So I think utilizing data and making sure that data is understood to be valuable within government, even if it's sharing between government departments, and linking up business level data to the outcomes that government wants to see in terms of economic growth, that's pretty critical. And understanding how you can then relay that into a segmented approach to businesses so that you're hiding the wiring and not really relying on the businesses to navigate these challenges when they're looking to grow, that really has to be something that's baked into the future sort of plan for the restart of the industrial strategy, but also the plan for economic recovery.
Thank you very much. Mirka, last word to you. Both of you have been excellent. No hesitation, repetition or deviation at all. Mirka, over to you.
I think the future of strategy has to be about understanding ecosystems and the role you play in that ecosystem, the value you add and the value you drive out of that ecosystem. So any strategic models prior to that look at you as individual company or corporate or government setup or cell are absolutely passe. It is all about interconnected supply chains and ecosystems. And that's what the future of strategy has to be. And these are the things that will drive economic value.
Thank you very much indeed to my panel. I have to say that's been a brilliant session. You've all been incredibly open and honest, and I really appreciate it. I guess if I have some takeaways for the audience, it's about understanding a journey, it's about collaboration, it's about working together. And in the end, I guess, I like this word, but it's about multilateralism as well, because coming out of this crisis is about a shared purpose in making sure that our supply chains run smoothly, particularly medical ones, but also making them sustainable as well. So I can only say huge thanks to my panel, huge thanks to the audience as well for being very collaborative on this session and asking loads of questions, which was great. Yeah, thank you very much indeed for your time. Thank you.
Thank you.
Thank you.
Thank you.
Thank you.